What's up, everybody? I'm back with a part 3 of this reversal series that we've been doing. We have, just to recap on it, we have been examining and breaking down major reversals in the market, major structure shifts, and if you've watched the other two, this doesn't need much more of an introduction. We're just going to hop right into it. And from where we left off back here, you see this nice long trend down. We see 5 waves right here. Right here we see a long drop, contraction, and then expansion, right? So 1, 2, 3, 4, 5. We get to that 5th lower high, and we make this last drop, right? We get to that 5th lower high and make this drop. Okay, so we come down to here. Now, what's the thing that we can pay attention to on the monthly? There aren't many details right now on the monthly, but one thing that you can always look for is just liquidity that has been captured in the past, right? So you can see all this, right? All this liquidity in the past that has been captured. So what do we see right here? We see kind of an accumulation type of phase that might be setting up in this area, right? We see this big impulsive move off of this range, and I guess get rid of that. We see this range right here, and we see this impulsive move kind of break out of it, right, to the upside, and it's coming back down. You know, I always talk about engulfing candles, and you know, you want to wait for, you know, equal lows to capture liquidity, and then see what happens after this contraction, right? After this contraction, right? So the market will go down, contract, expand, contract, expand. Basically, you know, when it's in a downtrend like this, it's a redistribution, right? Redistribution, and then redistribution. So then we come down into this area, this interesting area down here, where there looks like there might be an accumulation phase going on. So in this range right here, we see a move, a breakout to the upside. We see a move, we see a breakout to the upside. We can use this wick right here just because of the what this candle looks like. We can use this wick, and as you see on the monthly, we have this engulfing candle and a trade, or not a trade, the market trades back down into this order block, right? So let's go break it down on the weekly now. We get down to the weekly, what do we see? Well, those equal lows, they did get hit right here, and a minor, you know, I'm sure on the daily we'll be able to see it a lot better, but definitely an accumulation phase going on down in this area. So really, same thing from the monthly I see on the weekly. We have this small sideways channel, this contraction phase, and then a breakout So let's go to the daily automatically. Ooh, yeah. So a clean accumulation phase right here. So what do we see? First off, we have this markdown right here. Yep, right here. We had it before. We have this markdown, right? When we come down, market has a spike down right here, right? So this could be a sign of weakness, or this could be a seller's climax, right? This could be a seller's climax. Now, after this sign of weakness right here, we have an aggressive move to the upside, right? So we call that an automatic rally, right? When we come down here, we have this secondary and third test. So let's just do secondary test like this, right? And what do we have? This phase B, right? So let's say we're in phase A. We have phase B. When we come down here, we have phase B secondary touch, right? So phase phase B secondary, I don't know what just happened. Phase B secondary touch. Right down in here. So what do we look for now off this? There's a big up move, right? But before that, if we zoom in, remember this is that sideways range. Look, market is really choppy and going sideways. These, you don't really want to trade in these areas, right? We have spike up here, which is the market, banks telling us, they're leaving their trails behind, right? They're leaving their trails behind. But see, when the market spiked up right here, look what we had. We had equal lows again, right? So these equal lows, there was still liquidity down in this area, right? Maybe some buy stop orders, extra buy stop orders that they needed to pick up before moving price in a bullish trend, right? So we see this move right here, but we got to realize there's equal lows, right? Still equal lows right here. So we got to realize maybe this might still, want to come down. And it does. It does just that. Creates more equal lows right here. Right? Relatively equal. And then look, we have this move that comes down and shoots straight up. Okay? This impulsive move right here. Remember, we're in phase B. This is the secondary touch, right? This is the secondary touch. And then we get that spring of action, right? We get that spring. So right here, oh, where are we at? Let's go back down into here. We get that spring. Right here. Now we're in phase C. right? After we see this spring right here, see, because this one failed, right? So if you happen to take buys here, this failed because there was equal lows. More equal lows got printed out, and then this last stop hunt and a spring, right? What always comes after the spring? What always comes after the spring? There should be a test, right? There should be a test of the spring. So down in this area, from the last point of liquidity, this minor liquidity right here, this last up candle before this down move, this last down candle before this up move, right? Place it right there on that body of that up candle. You see right there, right, that we would have had a perfect entry straight up for about 800 pips, right? So that was the test of the spring, right? So just go to test. Now remember, this is all happening on the daily time frame, right? This monthly, remember this is that monthly breakout right here. This is that monthly breakout. Here's the daily breakout, right? So if we take this and we have a short term, right, sideways channel, see these equal lows? We captured liquidity below these equal lows, right? And had an aggressive impulse to the upside, breaking the upside liquidity as well. Maybe um, maybe giving us a hint that this is a shift in structure, right? Shift in structure. Okay? Okay? So what comes after that? This impulsive move. We see this small line of liquidity that was broken right here. See this up candle right here? You could say these 3 wicks right here. You could say that these are really minor equal highs, right? So we test right back down into this breaker scenario, right? This up candle before this down move, and then we had this impulsive move up. What happens again? Okay, this was that monthly. So after this, say that the monthly candle had gotten formed, right? We'll just go to the monthly. Say that that monthly candle had gotten formed. So we'll go here to next month. Okay, go to start of this month to the end. Okay, we'll go back to the daily and we'll look at what happened in that time period. Right here, we'll go red for this whole monthly area, right? So remember this is phase A, phase A, phase B, this is phase C. Now remember, this whole monthly area, this is that monthly candle, right? And this is the end, this is the start of it. So this is where we saw this breakout, this area in particular right here. This area we saw this breakout to the upside on that monthly time frame. So we know now that liquidity had gotten broken. This range that we were in for some weeks, for some months, this range that we were in, if you guys remember that monthly, you remember that monthly one was like this. So we were creating equal lows and equal highs. We captured both sides right here on the spring. Then after this test, we had that monthly breakout right here, right? So where would we want to look, right? Where would we want to look to get an entry? Okay, so this is a breaker scenario again, right? So look, we have minor equal lows. Now remember the question I always ask myself when I see something like this, when I see like a breaker block scenario um, looking like it's going to play out, right? This is something I always ask myself. Did a lower high get broken, also known, as a stop hunt, right? So was a high or low taken out? Yes, this low was taken out before these highs. So yes, there was. Now, when this monthly breakout occurred, we ask ourselves, did it break the previous high or low after hitting the stop losses? So if people were buying right here in this area on this double bottom, and we came and captured liquidity and took all the money and shot up this way, I would have to say that yes, it did break the previous highs or lows after hitting these stops. It did. So now, this line of liquidity, we see these last down candles, this last few days of down movement before this up move. We see right here that there's equal highs. There were equal highs that got broken right here. That's why price didn't come back down very much right here, right? There was a lot of buy orders that had been accumulated enough to push this up now. So we have this shift in the market. So this would be our another point of interest that we could possibly have, right? So if I took a line and I went across this area, right? I went across this area. You see right here, this short-term high that got broken out in a breaker situation, right, got retested. Now, you could have taken this entry again right here, maybe. You could have had an entry here, 268 pips, or, and maybe possibly held it, but you would have had some drawdown right here, right? Okay, so how do I minimize that drawdown? How do I minimize that drawdown? Look right here. You see this last down candle before this up move? It's basically on this fatter breaker candle right here. Now I wonder, let's try something out. If I put 50% of this area, I wonder if we can get a sharper entry point, right? So look, we're on this last down candle before the up move, and then this impulsive candle before this down move, right? So let's see where this goes. Okay, so you see right here, first buy opportunity would have been right here when it hit this line. Okay, you should have taken some profits and put your stop loss in profit, right? So no doubt it would have came back down and broke you even right here. But let's say after we recap and we remember this breakout, right? We remember this breakout, okay? We remember it, okay? monthly time frame breakout, giving us a sense of what? A shift in structure, a shift in the trend, a shift in the market, right? We just came off of a long downtrend, right? And we see this breakout now. We see this long breakout captured, you know, this, 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 right? We started capturing liquidity to the upside. So what if we still had a bias to buy, but we got in early? Okay, so look, that last impulse before we really saw the up move, we had equal highs broke. Okay, right in here. Now this is getting advanced. I know it is. And some of you might have to watch this over a couple times to understand, you know, different forms of mitigation, right? Different areas of interest. Not to not to get you away from, using order blocks for entries, but to give you an understanding that if you miss an order block entry, then you're not just feeling left out of the market. You can find other entries, other ways to get in these reversals, right? We're talking about reversals in the market. Okay, so what happens? That 50% area of this breaker, right? This bullish breaker right here. We come right back to it. So first opportunity was right here, and second would have been right here. Okay, so we have our second opportunity to buy, and then we finally start going up. We finally start moving to the upside. Okay, go back to the monthly. We broke down that area pretty well, and now we're going to move our way onto the next area of reversal, right up here. We're going to move onto the next area. We examined this reversal point, and now we're going to examine this reversal point. Okay, so let's get started. So we had this long trend up, right? After this reversal point, we had this long trend to the upside, right? Had a lot of bullish momentum. Had a lot of bullish momentum, right? And right, had a lot of bullish momentum to the upside. And then we get finally up here. Now, what is up here, right? We finally see that there's these equal highs to the right over here. Got a lot of stuff on the charts, but we're just learning. We're going through these lessons, right? Just to remember that we have gone through this whole monthly chart, right? We're almost finished. Okay, so we see a capture and liquidity on a higher time frame perspective. These equal highs got left behind through this whole downtrend. Okay, so it comes back up, and we see equal highs here, right? So equal highs being made inside a price zone where other equal highs are, right? So these equal highs are over here in this, you know, 120 to 124 institutional big figure, right? These areas right here, 120 to 124 big figure. Okay, so let's go down to the weekly. We're right here. Okay, so here's these equal highs that we spotted on the monthly time frame. We see price come up. What does it do? Makes that double top. Okay, and we have this sort of mitigation double top right here, right? So after this liquidity got captured, we see this impulsive move, and then you see this long wick right here. We see this aggressively shoot to the downside. Okay, I'm telling you, banks always leave their trails behind, right? They always do it. So this last area of up candles before we had an impulsive move to the downside, this would be your focus point right here. Okay, why not over here? Why not over here? It could have been, right? It could have been. We could have still, been going up. Who knows? Who knows, right? So it could have been until we figured out that when this candle got made, it would have hit your stop loss. No doubt about it, okay? Sometimes we take losses. Everything is not perfect, right? So you see these equal highs, impulsive move up, and then this impulsive move down. You can clearly see that this long wick, this candle had came down and traded down here at one point, right? So then what do we see? Okay, maybe a shift to the downside. Since this area is so small, right? This area is so small, we want to use the last point of down liquidity that it broke, right? So if we place a line right here, you'll see that when the market came back up like this, we had that pinpoint accuracy, that precision entry right here, okay? That precision entry right here. Also, we had in the middle of this, we had, you could say, buyer's climax right here. You kind of have this little up thrust right here. And then this U-tab, a nice little distribution phase on the weekly time frame, right? Right? So we have this. Okay? Right? So let's go down to the daily. And we're really going to examine this. Okay, so to recap from the monthly and the weekly time frames, we saw these equal lows get hit over here, right? Market breaks out, okay? And what do I always say? Contraction, expansion, okay? So if we look right here, these highs where these equal lows, these equal highs right here on the daily time frame where they got hit. If you look at this, right here, these equal highs. If you look at the top of this range that got broken out, the top of this range, we had a breakout on the daily perspective, right? Daily perspective, we had a breakout. This last buying point of liquidity that got broken in a bullish breaker scenario, right? That's the point of interest that we use for breakers, okay? Right? So in a bullish breaker block scenario, what do I say? What do I always say? Is a bullish range or an up candle in the most recent swing high, right? Most recent swing high, right? So this goes for mitigation and breaker. The most recent swing high, right? That got broken right here. Okay, so there's this one, and then this big one. We could have taken an entry right in this area. Okay, maybe up into this kind of fatter order block, this point of interest, maybe right here. Okay, so how many pips would that entry be with the drawdown? We had about 9 pip drawdown up to these highs, right? Or to this order block even. Look, 377 pips, right? You would have taken partials, put your stop loss in profit, and it would have came back down and broke you out. Okay, so what happens after that? What happens after that, right? So see this last up candle before an impulsive move down, get filled, get accommodated for on the open. Then it comes back up to the 50%, right? Comes back up to the 50%. Why does it do that? Why does it do that? Let's say you took a sell right here. Let's say you took this sell right here, okay? And maybe you caught some pips off of it, right? You caught some pips, 370 something pips, right? Let's say you caught that. But then why does it come back up and mitigate out of the 50% area? What do we see here? Equal highs. There's equal highs that got captured. What happened to price? Right here, slippage. We had this market aggressively fall to the downside, right? Aggressively fell to the downside. What does it do? Okay, there's a breaker scenario, guys. A breaker scenario. A breaker scenario going on, right? So look, did the highs get taken out? Did stop losses get ran through? Yes. Did it break the last high or low or the previous most recent swing low prior to an old high being broken out? Right? So this recent swing low right here. Right? Yes, it did. So if I took a box all the way over, you see right here, we had trade opportunities, right? We had trade opportunities set up. Okay? And then the market finally gave way and traded down. All right. So you guys see what I'm doing, right? Everything happens. It all happens over and over again. Look, expansion, contraction, expansion, contraction, expansion, contraction right here. Where does it go? Where does it go back to? It's last up candle before the impulsive move down, right? So this is the last area right here, but I think we're going to call this lesson good. And it's a 3-part series so far. So make sure to, watch, part 1 and part 2 over, over and over again to understand, the different ways you can enter the market, how to catch these reversals, how to catch, longer moves, more pips, right? So, um, I hope you guys got some value out of today's lesson. We did this low one and then this high reversal, and give me guys, I want you guys to give me some feedback on the lesson. Let me know if there's some things you don't understand. Feel free to ask me questions. It doesn't bother me. Um, but yeah, hope you guys got some value out of this. And you know, they say the most successful people, they put in their 10,000 hours of hard work. You know, so if you want to get good at trading, get good at this game, I will just let you know, you're not going to get, you know, as much results as you want to see just by watching these videos, okay? So go on the charts yourself too. Go on the charts, practice back testing just like this. Um, Practice looking for trade opportunities that have presented themselves in the past, and you know, really train your eye, your brain, your just your fibers in your body to see these type of things, right? So I'm going to end the lesson here. Hope you guys got something out of all of this, and let's keep learning, keep winning, and have a good rest of your day.